Welcome back, everybody. Sive is here with the Forex Peace Army.com. Let's take a look what's going on in euro currency. So in general, yesterday we talked about the money consolidation on intraday charts, and we said that take a look if market will hold the weeks of the lows of the weeks and stand in a tight range. Be prepared for the immediate upward continuation. So in the case if these lows will be taken out, then probably we should get the deeper retracement. Currently, you can see what has happened. So this performance I will show you a bit later that it was prepared not only by our suggestion about this consolidation, but later within a few hours you could see that two grabbers have appeared on the follow time frame chart, and actually that was the great point for position taking because it just confirmed the idea that market is preparing for rally. There are two objects for this rally actually, why this has happened. First of all, you probably know about the agreement between the India and European Union. Maybe it's not as good as it might be, but I think that it's really breakout. There is lots of other objects for communication, for cooperation, because you know that India, for example, is active buyer of the Russian oil, and European Union could avoid sanctions just to organize the transit delivery, the hydrocarbons from the India, I mean Russian hydrocarbons, Iran hydrocarbons, to the European Union with a big discount, and actually bringing another branch of the energy independence and trying to just be not on the hook of the United States, who is right now is a major exporter of the hydrocarbons to the European Union. So this might be a really big achievement. But another reason, as you can see on the dollar index, for example, is collapse on the dollar. The dollar is going to hell, and investors just are tired from all this chaos that is brought by the Donald Trump. It's just they already are not caring actually about what he's talking or why he's talking about this, and actually he's just trying to go out. And this process is spinning up. Maybe it's not active currently, but you could see on the dollar reserve, on the it's dropping significantly, so everything goes not very good for the dollar, and I suspect that this significantly increased chance of the big conflict in the Middle East. No, actually they accumulated so much power around Iran right now, so because if they will not strike, they will hurt their reputation. If they will strike, it might be a really big mess around in the region, and nobody could actually predict what could happen. And they vitally needs this strike because they have to change the attention of the investors from the problems in the financial sphere to something else, to restore demand for the safe haven. Yes, gold probably will rise, but for some time it will support the dollar and support actually demand for United States bonds. So all this collapse of all this gathering of the events actually put the shadow on the perspective of the dollar performance, and bring the performance of the euro currency and other assets in from the different side. So what we could see currently on the technical side, since this action stands very fast, we have to also use some higher standing time frames, and we start from the dollar index. So if you take a look at the dollar index, here's what is going on actually. Previously we talked about this. I even put these big patterns sometime ago on our forum, because on the euro currency this ABCD pattern was already completed, but the dollar is just coming to it. Its approximate target is around 95. And this is actually the trend line that everybody is talking about on the dollar index, and they said that dollar stands near the collapse. Probably it will happen. It will be just a big drop and so on. Maybe this will happen. But first, you could see that if you plot here the Napoli levels, you will see that's probably also the 30% support. I suggest that's it. And also we have here, as you can see, trend line, and we have Gartner's triple to pi. So this is the point where entering the dollar index, it might be the support, especially if it's really some big mess on the Middle East will start. Right, so you can see market somewhere is near the 30% support here. So But this is only the half of the story. If we take a look at the euro right now on long-term charts, you will see that although market is challenging this consolidation, as we said, this is bullish sign if market will stand in a very tight range. But also, it is entering in the wide confluence resistance area with really wide borders. So starting from the 2020, where market is challenging already, up to the 123. And 23.78 is already yearly pivot point for this year. So it will be really big resistance cluster that approximately coincides with the 95 area on the dollar index. That probably will be really big volatility around it. I wouldn't be surprised too much if we'll get some more or less significant pullback that could coincide with some activity in the military sphere, some conflict or something like this. That could trigger mid-term support for the dollar. That's theoretically is possible. Here we should not be too optimistic about immediate upside breakout. Let's just keep watching what will happen. And we should be careful with the possible downside reaction out from this area. So this is important. On the weekly chart, market is not at overbought. It stands close, but it's not at overbought. Overbought stands around 29.50 for this week. It has room to keep going higher, but on the daily chart, market is at overbought. And also, it has completed our first butterfly targets, 2040, that we talked about. At the same time, you could see what the actual acceleration here stands. It tells us that probably as a XOP, inner XOP to the butterfly, 2930 will be reached, as well as the 22 target of the butterfly also will be reached, but probably a bit later, just because of the technical limitations of the big overbought currently. So here we need to keep an eye on the possible pullback. At the same time, reaction with this taking in consideration actually the pace of this upward direction, we do not want to see the downside breakout of the 118 area. If market will stand somewhere in this range, most recent range, it will be okay. I would even prefer that it stands somewhere on the half part of this, not moving too low down. So somewhere around retesting of this top, for example. Somewhere around 119, it will be okay. Some retracement here. And I prefer to make the plan based on this suggestion. It's also interesting to see where we have the oversold area for a daily chart. So let's take a look, because it might be also important. Oversold stands very, very low, so we do not need it. Doesn't help us too much. So on the phone time frame chart, it means that first that we will be watching for is an area around 1930. It's the first confluence, or can see 1928, 1945. That's the grabbers that I was talking about. So once we stop speaking, we stop preparing the update, a bit later, here's immediately grabber has appeared. That was great confirmation of the idea that market will hold the lows of the week and start upward action. Later it was another one, but it already stands on the march, so this was that might be used here. Anyway, that's the first level to watch for. And the second level that we could consider is 1862, 1887. It's not about 190, but it stands relatively close, and it's also enveloped. You can see it's approximately around the previous top. And also you can see envelop the previous consolidation, so it agrees with it. So it might be used some kind of the vital area for position taking. Here's also a first trade that might be considered is if market will reach 1930. It might be treated like thrusting action here as a bread and butter trade. That might be good background for considering taking a long position. Later we will see what will happen. If market will keep going higher, that's great. If we will get some pullback, completing the bread and butter and deeper retracement, that's also okay. So in this case, we'll consider another entry on the lower time frame. On lower levels. Finally, on the hourly chart, currently I do not see any clear bearish patterns. The only thing that we could identify is some kind of the ABCD, and it also agrees. Take a look with the 1923 area with the same conference area that we have here. So 1920, 1930, this is the first area that we will take in a look at it, because it might be the background for the bread and butter buy. That's the first step in our plan, and then we will see what will happen next. So that's probably all for now. Situation looks really interesting. It's also Fed meeting, so might bring some intrigue. You know all the background that stand behind with this conflict between the Powell and Donald Trump. So we'll see. It's interesting. Will be what actually Jerome Powell will tell. And in general, overall background looks really interesting, and with such kind of the pace on euro currency, we know the direction. Actually, the only thing that we need to do is to get and to catch the proper point for a new position taken. That's our major task.